What if your trades could execute in milliseconds, without fear, hesitation, or second guessing? Welcome to the era of algorithmic trading in Forex, where code replaces emotion and data drives every decision. Algorithmic trading, often called Algo or automated trading, uses computer programs to analyze market conditions and execute trades automatically. Instead of manually watching charts, traders build systems powered by mathematical models, historical data, and predefined rules. The result: precision, speed, and discipline. In the fast-moving Forex market, timing is everything. Algorithms scan massive volumes of real-time and historical data, identifying patterns invisible to the human eye. They execute trades instantly, eliminating slippage, hesitation, and emotional mistakes driven by fear or greed. But that's just the beginning. With backtesting, traders can simulate strategies against years of historical data before risking capital. Risk management rules are embedded directly into the system, helping control exposure and optimize performance. Advanced strategies like trend following, arbitrage, mean reversion, and market making become scalable and consistent. Still, this revolution isn't without challenges. Building reliable systems requires programming knowledge, market expertise, and constant optimization. Overfitting, volatile market shifts, and evolving regulations add complexity to the equation. Looking ahead, artificial intelligence and machine learning are pushing algorithmic trading into a new frontier. Smarter systems, faster analysis, adaptive strategies, even big data analytics and quantum computing are beginning to reshape what's possible. The truth is simple: Forex trading is no longer just human versus market. It's technology versus inefficiency. And those who master algorithmic trading aren't just participating in the market, they're engineering their edge.